What is up, Rumble, YouTube, and Twitter? Welcome back to the Ryan Matta Show. I'm your host, Ryan Matta. Thank you for joining us on this beautiful Tuesday afternoon. Today is April 16th, folks, and Bitcoin is down to 62,000. 62,000, I think 500 last time I saw, but we're going to pull that up here on the charts. We're going to dive into a lot today. We got a great interview tonight with BitBar Swiss. So if you have not heard of BitBar, it's probably one of the coolest crypto wallets, I would say, or seed storage wallets that I've ever seen. So you have metal plates. I got one right here. Most people store their seed phrases on like a metal plate, right? And the idea is that on a metal plate, if you can throw this in a safe, your house burns down, whatever happens, you can restore your Bitcoin wallet as long as you got the seed phrase. So they've created this little bar that's super cool. Actually, let me just throw it up here on the screen for you guys. So let me give you a little sneak preview of what this probably one of the coolest seed phrase wallets that I've ever seen anyways. Let me actually just pull up one of their ads here for you guys and let it rip. And this is what we're going to be interviewing their team tonight at 9 p.m. Check this out.
Are you banking on a digital future, yet plagued with nightmares of losing it all? Imagine no more anxiety about misplaced mobiles, vanishing laptops, or those vital yet so easily misplaced scraps of paper. Introducing BitBar, the world's most secure offline crypto wallet, tailored to protect your digital treasure from all types of mishaps. The crypto wallet is the universal key that fits all. MetaMask, Trust Wallet, Coinbase, Ledger Nano, and so much more. Check out these Swiss-engineered pre-engraved letter tiles. Setup, as easy as spelling your name. With BitBar, it's all no tools, no hassle, just maximum security for your crypto. And the cherry on top? It has got all 2048 words covered. That's right, your seed phrases are now BitBar secure. Cold wallet, hot wallet, doesn't matter. The wallet plays for all teams. BitBar, because sleepless nights should be a choice, not a necessity.
Big shout out to Dax over on X. He's the one who shared that with me. He said, I just watched a sweet YouTube video or a video over on Rumble about this new crypto wallet. I was like, cool, send me their Twitter. And he did. And I reached out to their team, and now they're going to be coming on tonight for an interview. So that's going to be cool tonight. Let's jump into what's going on over here in Bitcoin news. We're going to dive into this here in a little bit. So 30 trillion U.S. debt spiral could spill over to Bitcoin. I think it definitely could. And then this next one I want to talk about, Bitcoin supply to run out on exchange in 9 months, according to Bybit. That's pretty badass, folks. We're talking about there's going to be a liquidity crisis in Bitcoin, meaning you're not going to be able to buy any Bitcoin. I don't think that that's far-fetched. And I don't think it's far-fetched to think that your government's going to start making it illegal for you to buy Bitcoin. So check this out. Big shout out to the Bitcoin therapist. Hopefully one day I will get the Bitcoin therapist over to join us over here because he's always dropping the best content. He says, what I learned in college, and this guy's holding out his finger and he's got like a tiny little booklet on it. And it says, what I've learned from Bitcoin. And it's just stacks and stacks of paper. It looks like a book that's like, I don't know, probably like 10,000 pages. But I want to get into this news clip that was shared first before we get into these articles. And this is by MD Bitcoin over on X. He goes MDB for short. He says, must watch Bitcoin versus gold. Natalie versus Peter Schiff. This is epic. It's probably one of the best showdowns. And it just shows how people like Peter Schiff and these gold bugs are just like, they're senile, man. They're old boomers. You can't blame them. You can't help them. Can't teach an old dog new tricks.
You've been waiting for it, right? Well, let's hear the halving. It's upon us in the Bitcoin community. Let's just say they're champing at the bit. And why not? Take a look at that. I think this will be the fourth run, right? The prior three all saw strong rallies over the next 12 to 18 months. Let's bring in Coin Stories podcast host Natalie Brunell. All right, Natalie, so is there a chance, though, that when this initially happens, we could actually get the old buy the rumor, sell the news kind of thing?
Sure. I mean, a lot of this has been priced in, so I think we can expect short-term volatility as usual. But long-term, the price has been trending up, and we've actually never seen a new all-time high in a cycle prior to the next halving. So things could get a little spicy here.
We've got them on the chart here. I mean, so it's amazing. The first one, I mean, it's just absolutely, it's hard not to be enticed by what we're seeing here, again, over a certain period of time.
Yeah, the logarithmic chart is always really expressive of the fact that Bitcoin is just going up in one direction. But, you know, a lot of people can get kind of confused. What is the halving? Because we've never had an asset that has this baked-in reduction in the incoming supply, regardless of the demand. But I really think it demonstrates the elegance of this programmatic monetary policy that really is an elegant set of rules with no rulers that we all engage in and participate in voluntarily. No one's imposing this on us. Bitcoin is chosen by us, the people.
And this is the core, one of the core value propositions of it, right? But I want to ask you about the last few days. Bitcoin's come down a lot. And so folks who are anti-Bitcoin are saying, hey, there you go. It was sold to us as a sort of a hedge against geopolitics. And as soon as something flares up, it collapses. What do you say to people like that?
Well, you know, it's the fast money that's selling in and out of Bitcoin and creating this short-term volatility. The smart money and the permanent capital is seeking shelter in Bitcoin, and more investors are going to see it as this flight to safety, including when things get more and more uncertain and chaotic around us, because Bitcoin is the one thing that is actually certain and predictable. The halving is just another example of that. It decouples the power to manipulate money from the state,
right,
and it allows all of us to be in a fair competition so that real value can come to the surface.
All right, Natalie, I want you to hold right there for a second, because I want to get back to you in a second, but I also want to bring in a friend of ours. It seems these days everyone is gold member, right? Check this out. Goldman Sachs saying gold $2,700 an ounce this year. Now, we know, of course, emerging market central banks have been buying gold for a long time. Look at that, go all the way back a decade or so, folks. These are central banks, not the ECB or the Fed. Let's bring in Euro Pacific Capital chief economist, also global strategist, Peter Schiff. All right, Peter, gold obviously rocking. Everyone's obviously jumping on the bandwagon. The question is, why now? Why at this particular time?
Well, you know, gold's probably going to close at a new record high close today. It's only a few dollars off it now, above 23.70. You know, gold is rising because the dollar, the euro, the yen, fiat currencies are losing value. Inflation is real. It's here to stay. It's not going anywhere near the Fed's 2% target. We're headed in the wrong direction. We'll probably be in double digits by next year. And eventually, the first digit isn't going to be a 1. Central banks are out in front of this. They're the main buyers. You know, a lot of Americans have been foolishly selling their gold to buy these Bitcoin ETFs. You know, there's nothing elegant about losing your money in Bitcoin. Bitcoin is not going up. In fact, Bitcoin peaked 2.5 years ago at about 37 ounces of gold. As we speak now, it's worth less than 27 ounces. That's a 27% decline in 2.5 years. This is a bear market. Right. Bitcoin is going much lower than this. If Natalie were smart, as soon as this segment is over, she would sell all of her Bitcoin. Because if she doesn't sell it now, she's going to sell it later at a much lower price.
All right. Well, them's what we call fighting words. And I think there's similar drivers for both. But let me introduce the two. Natalie. Natalie, meet Peter. Peter, meet Natalie. All right, Natalie, some choice words for you. What would you tell Peter?
Oh, I know, Peter. And you know what? Bitcoiners don't feel the need to constantly attack gold because we're not threatened by gold. And the reason that we have this failed fiat experiment that has impoverished our nation is because of the defects of gold. The fact that it's not easily portable, it's not easily verifiable, it doesn't offer instant final global settlement. And so you know what? Centralized authorities hijacked it, they papered over it, and we have a system of leverage and rehypothecation that hurts the working class. Bitcoin is immune to all of that. It is the savings account for billions of people that we really need and can most rely on, and it offers that final global settlement that we need. And so gold is the analog version of sound money, but Bitcoin is the digital version, and that's why it's going to be the faster horse in this race.
Peter?
There's nothing sound about Bitcoin. It's losing the race right now. Take a look at your screen. Gold is up $25, $26, and Bitcoin is getting clobbered. You know, there is no flaw in gold. Gold worked great for 5,000 years. The problem is the flaw is with governments. The flaw is with human beings, not with gold. But Bitcoin is really flawed because it doesn't have any actual value. Gold is the most useful metal on the periodic table. That's why it's money. Now, it has great characteristics that make it better money than other commodities, but absent its intrinsic value, it couldn't be money. And Bitcoin has no intrinsic value. It's just a digital string of numbers. And all of this is just a bunch of hype.
Anything could be money, right? On the island of Yap, they used to have big stone money. Anything could be money if people use it as an exchange. And this is the thing.
But that's because
But here's the thing, though. You have to admit, Bitcoin is on the rise. Wall Street has embraced it. And this is just a tiny speck. I mean, could you imagine, Peter, at the rate of recognition, if Bitcoin keeps going at this rate, it's hard to deny it could go substantially higher.
Second to none. Oh! He front kicked him in the face. Absolutely right. Trying to finish. It is over. Kick to the face. Anderson Silva. Second.
Now, I just told you it's been dropping for 2.5 years. That's when it made
an
its
all-time
peak.
high recently.
And I think that decline is going to accelerate.
What is he talking about? Delusional.
It does not keep going up. They suckered in a bunch of people. Wall Street didn't embrace it. They're just trying to make a buck off it.
Just put it in
I mean,
the
these
all-time
big
high.
Wall Street firms aren't buying any Bitcoin with their own money. This is their customers' money that are dumb enough to buy it. They're just booking the bets. They're operating the casino. They're not at the blackjack tables or the roulette wheels. That's their customers that are doing that.
Natalie wants to jump back in.
You know, if you look at the short term, Bitcoin is going to be volatile. But if we zoom out, Bitcoin has outperformed gold. In fact, when Hamas attacked Israel, since then, Bitcoin is up 125% and gold is up only 27%. So let's really look at the numbers that we're seeing. And the best thing about Bitcoin is, again, no one controls the ledger, whereas gold is really vulnerable to centralization and top-down control, which is why we need a system that is a neutral place to store your wealth. We need a neutral system
Natalie,
and protocol.
don't even
And that is
compare.
Bitcoin
Peter,
for the
why
digital
can't someone
world.
own both?
Bitcoin.
Why can't someone have exposure to both?
Yeah, well, first of all, Bitcoin has outperformed everything. So don't compare it to gold. It's outperformed stocks, real estate, bonds, collectibles. That's because it's a gigantic bubble. No, if you want to own Bitcoin, I don't care. If you want to lose money in Bitcoin, go right ahead. Doesn't bother me. But I'm trying to help give people advice as to what to do with their money. And if they want to have an investment portfolio, Bitcoin has no part in it. But, you know, if you like gambling, if you want to take some of the money that we're going to take to the racetracks or buy lottery tickets with or go to Vegas, if you want to take some of that money and gamble on Bitcoin or any of the other 20,000 cryptocurrencies that are out there, go right ahead. I mean, it doesn't bother me, but I don't want to buy any Bitcoin. I mean, sure, had I bought Bitcoin years and years ago when I first learned about it, yeah, I could have made a lot of money selling it now to the greater fools, but I didn't do that.
That's something
but
he
I'm not
said
gonna
on my
make the
show. He
mistake of
wishes he
buying it
bought
now.
Bitcoin.
Yeah. So Natalie, bottom line though
But
is
I'm not going to buy it now. And Natalie, you're going to wish you sold Bitcoin. Mark my words.
All right.
You're going to be ruining your day.
We
I would,
take all of this stuff,
If
Peter.
I'd only sold my Bitcoin, I'd have had a lot of money.
We got 30 seconds left. I got to give Natalie the last word.
I think the American dream has really been hijacked. We tried gold. It didn't work. It was papered over. That system has failed the American people. And Bitcoin does provide hope for us, the working class. We want to be able to work for something that has to be measured by a free market so that we can see real value emerge as opposed to being captured by politics and bureaucracy, which ultimately is a system that benefits the few at the expense of everyone else. And it's a system in which the politically connected and the special interest groups really are at the top. And so we need a system that is for the people. Bitcoin is for the people.
Natalie, thank you very much. Peter, thank you very much. Liz Clayman, over to you.
I was enjoying that.
Oh, folks, it's on. It's so funny watching people try to convince you that gold's going to be superior and that everybody should own gold and silver. And I'm not hating on it, right? Everybody talks so much shit like Bitcoiners don't own gold and silver, right? I got gold and silver, but I still think it's a shit coin, right? I still think it's an absolute Ponzi scheme. I think this leads to poverty, and this leads to your family barely keeping their head above water. Gold is up, what, like 26% in the last 15 years? If you would have listened to Peter Schiff and you would have put $10,000 into Peter Schiff's company the first time that he went on press and talked about Bitcoin, you'd have like some odd like $7 or $8 million. If you put $10,000 into Euro Pacific Peter Schiff's trust, you'd have lost $1,000. You'd have like 8,700 or something like that. So just to put that into perspective on who you're taking advice from, I think Peter Schiff would be the last person. Now, I guess what? I'm going to have Joe Burnett on the show next week as well, or maybe in a couple weeks. I don't know the exact date, but he's coming on the show for an interview. And Joe says, your wealth is melting by Bitcoin. We have not, until 2009, had an adequate asset to transfer our wealth through time without a leak. In the long run, Bitcoin may be the only asset that can stop the market from inevitably melting your wealth. And he's going to be on the show. We're going to talk about this here soon.
For the last 7 months, I've been working on potentially the most bullish piece of Bitcoin content I've ever written. It's titled, Your Wealth is Melting. I think many people have been thinking about Bitcoin and wealth incorrectly for more than a decade now. We have not until 2009 had an adequate asset to transfer our wealth through time without a leak. Humans have been depending on assets that can be perpetually produced or devalued by natural free market forces for far too long. Because Bitcoin is a new tool that will reintroduce the ability for people to clearly distinguish between investing and saving, in the report, I propose that holding cold storage Bitcoin may provide the highest long-term risk-adjusted return for centuries to come. In this world, Bitcoin raises the bar for what will be a profitable investment, making humanity's pile of savings expand rapidly relative to the amount of wealth stored in productive enterprises and all other traditional assets. Since all other traditional assets can be perpetually produced or devalued by free market competition, in the long run, Bitcoin may be the only asset that can actually stop the market from inevitably melting your wealth. In the report, I make the case that most of today's wealth will end up accruing to Bitcoin, which means if this thesis is correct, the price of Bitcoin will likely reach incomprehensible levels over the coming decades. Using stocks, real estate, bonds, and all other traditional assets is no longer the optimal way to hold long-term wealth, and any wealth outside of Bitcoin will ultimately melt towards zero BTC. Of course, this doesn't mean nobody will invest. Anything profitable will be valuable. You just have to make sure you buy productive assets at the right price. And since today's money is bad money, most people are using productive assets as money itself. Think the S&P 500. This means these productive assets are highly overvalued today, and most of this wealth will continue melting into Bitcoin. If you want to read the report now, I'll include a link below to download the 37-page report. Definitely check it out and let me know what you guys think. Thanks for watching, everyone, and see you next time.
We had somebody over in the live chat a second ago over on YouTube talking about, nation states are buying gold. Who owns Bitcoin? Who's buying Bitcoin? Well, if you take a look at this article over here and you go over to Arkham's website, you can see the U.S. government among states with the largest Bitcoin holding. I don't think anybody wants to go over to China and live in their 15-minute cities. I don't know if you've seen the guardrails and the central bank digital currencies and everything that they're doing over there, but I don't think anybody wants to be like China, honestly, in my personal opinion. So I wouldn't be worried about what China's doing, considering they're on the verge of bankruptcy. But we can talk about this next article, which is by Bybit, or is on Cointelegraph, that says Bitcoin supply to run out on exchange in 9 months, according to Bitcoin. Supply on exchange will dry up in 9 months with the upcoming Bitcoin halving and the continued accumulation by Bitcoin ETFs. Bitcoin supply on cryptocurrencies exchange will dry up in 9 months thanks to the 50% supply insurance reduction on this week's upcoming Bitcoin halving. Now, provided that the inflows from the United States Bitcoin Exchange Traded Funds, the ETFs, Bitcoins continue, Bitcoin's post-halving supply dramatic will see an exchange reserves run out of Bitcoin, according to April 15th report by Bybit. Bitcoin's reserves in all centralized exchange have been depleting faster. With only 2 million Bitcoin left, we assume a daily inflow of $500 million into Bitcoin spot ETFs. That is the equivalent around 7,142 Bitcoin will leave exchange reserves daily, suggesting that it'll only take 9 months to consume all of the remaining Bitcoin. There ain't going to be anybody to sell you any Bitcoin soon, folks. It's legit. Check this out. We can show up the chart here as well. And you can see the chart right here. The amount of Bitcoin leaving exchanges is the blue line. We're actually below 2 million. We got down to 1.75 million, I think was the lowest that we got. I can actually pull that up and check it in real time here. Give me 1 second. We can tell you exactly how much. The lowest I seen it was 17.43, I believe. And we're sitting at, 17.41 right now. So it's pretty crazy watching the amount of Bitcoin leaving these exchanges and how fast it's happening. And you can see that chart down here as well. If I pull it up here on the screen, we can zoom in on it. But Bitcoin's leaving exchanges faster and faster. I think the lowest it looks like that we've got down to was 173815. So in the last, couple of days, we've seen maybe 3,000 or 4,000 come back on exchange, but not much at all in reality. And we can see exactly, you can tell, this is what's cool about Bitcoin. You can see exactly where the crypto is going on exchange. So it seems like Binance is continuing to acquire more and more Bitcoin, and you're seeing more and more Bitcoin leaving Coinbase. Another 76,445 Bitcoin has left Coinbase's exchange just in the last 24 hours. Just in the last 24 hours. Total across all exchanges in the last 24 hours was 3,010. Now, in the last 7 days, it was 902. But in the last 30 days, it was actually plus 902. So in the last 7 days, we're seeing that little pullback. We've seen 902 positive inflows into exchanges. But over the last 30 days, 76,924 Bitcoin have left exchanges. Now, let's just say we go based off of that same math. And we say that there's 1741, and we'll just round. 3, 1, 2, 3, 1, 2, 3. Okay, so that's how much Bitcoin's left on exchanges. This is how much Bitcoin. Oh, let me move that over here for you guys, so you guys can actually see that. There it is. So we have 76,924 left in the last 30 days. So if we just go divided by 76,924, we get 22 months. So I think Bybit's a little bit off. I think they're drastically off based on the last 30 days of data. Now, that could drastically increase or decrease after the halving. Your guess is as good as mine. I would say that it continues to ramp up. But as the price of Bitcoin goes up, I think less and less Bitcoin will be taken off exchanges. So I think you'll have that, if Bitcoin doubles in price, it'll take them twice as long. So I say probably about 24 months, 25 months, but definitely into the next election before we kind of come close. But I think even when we get down less than 1 million, imagine in one day, somebody like the Saudi prince could try to buy up 1 million Bitcoin, and it would be pretty interesting to see how fast that plays out. But I still like the bullish. It's funny how they publish things like that, and there's just not much to show that those numbers are accurate. But I like the positive shill of it. You guys tell me what you think. Let me zoom back in here. So the report comes amid a wider market slump that saw Bitcoin fall over 10% during the past week to 62,924 as of 1:36 p.m. UTC, according to CoinMarketCap. Now, Bybit, the world's third largest exchange, expects Bitcoin price to start recovering from the current correction, according to the report. With this in mind, it's unsurprising that Bitcoin's price may continue to climb before the halving, or even afterwards, as supply squeezes propel the price to another new record. Now, institutional interest in Bitcoin is on the rise. Weekly inflows into spot Bitcoin ETFs have been slowing down since March. Last week, we saw over $199 million worth of net inflows into ETFs, which is down from $2.5 billion in the week beginning in March 11th, according to Dune. Now, despite the recent slump, the Bitcoin ETFs amassed over 841,000 Bitcoin worth $52.9 billion, with over 12.7 billion net inflows since launch, according to Dune. That's insane, folks. That's freaking nuts. Absolutely bonkers. Now, Bitcoin investor allocation has risen since last September. Institutions are allocating an average of 40% of their total assets to Bitcoin. 40%. That's wild. While retail investors average a Bitcoin allocation of 24%, according to Bybit's asset allocation report from February 24th, Bybit noted that both crypto native firms and traditional institutions are gaining increasing exposure to Bitcoin via ETFs or proxy stocks such as MicroStrategy. The exchange expects more institutions to follow suit. We believe that not all institutions have been able to gain exposure since the approval of Bitcoin spot ETFs in January of 2024, as their investment mandates restricted them from investing in new products that have been in the market for only a few months. Okay, so that's interesting. We're going to see a lot more institutional adoption because some of them have safeguards and guardrails that prevent them from diving into new assets. So that's a good take on it. Let me know what you guys think over in the comments. Who we got over here in the live chat? G. Clark, good to see you, man. We got G. Clark over here, Home Skillet, Rumble Rick, PDX, Leroy, Hernando, RC, Peter Shift is such a troll. He so is. It's so funny. Let me throw the live chat up here and we'll jump over here and chat with you guys for a second. I got a couple more videos I want to jump into. It's funny, man. It's so funny seeing how people are so threatened by Bitcoin, and they should be, because they've been shilling a hopium pipe dream, a Ponzi scheme, which we consider gold, which in my opinion is just we tried it. We tried it for 1,000 years. It didn't work. It led to an elite group of people getting extremely rich while we, the little guy, just gets bent over and over again. Actually, let me give a big shout out to our sponsors really quick. Don't go anywhere. We'll be right back after this break. Today's sponsor is Bybit. Bybit is your one-stop shop for crypto trading, crypto investing, buying, learning. I've also built a step-by-step digital course which teaches you everything you need to know about buying crypto on Bybit, and not just buying crypto on Bybit, but trading strategies, setting up crypto trading bots. Bitcoin is the best way to fight against tyranny, to fight against government corruption, to fight back against the Federal Reserve printing trillions of dollars and depreciating everything that your family has worked for your entire life. So get yourself some Bitcoin. You should at least allocate a small percentage of it to your portfolio. Be a smart investor. Don't let the government take everything from you. Again, my name's Ryan Matta. Links to my affiliate codes are down in the description. Show this channel some love and go buy yourself some Bitcoin. Go buy yourself some Bitcoin, folks. You guys heard it over here. Bybit's taking good care of us. They're always my favorite exchange to trade on. If you guys live outside of the US, or you guys got to go get one of those Palua IDs that everybody's talking about, you can find those over in our private Telegram. Yes, need more businesses to accept. JN, that's what I'm going to go on a mission after I finish this documentary called Treason. Depending on how well it does, I want to go and film a documentary on Bitcoin, and I want to go around from country to country, and I want to show and I want to interview all the businesses that are trying to make Bitcoin accessible for the world. I watched they did at Bitcoin Atlantis. Everything at Bitcoin Atlantis was sold with Bitcoin. It's the only thing you could use there was Bitcoin, if I'm not mistaken. But it was really interesting watching how they had just basically like a, like a credit card processing machine, just like a little machine that, you just pulled out your phone and you zapped it with your, with your Bitcoin on Lightning Network, and you paid for your transaction and you were good to go instantly. It was the coolest thing ever. So I'm trying to get some of the teams from the people from those teams that work with the, Bitcoin processors and helping businesses get onboarded into Bitcoin. Do they have to run their own node? What do they have to do? How hard is it to set up and accept Bitcoin? It seemed fairly easy. And I think you can honestly probably just do it with your cell phone, just over the Lightning Network. And how they're able to instantly create invoices. And the Lightning Network's getting so cool, and I'm learning so much about running my own node and keeping your transactions private and hiding your transactions, which I really want to go into a lot more. And I really want to go in depth on Bitcoin privacy, because I don't fully understand how to hide transactions and how to use what do? They use those coin they use like the coin merge and things like that, where you put your Bitcoin into kind of a pool with other people's Bitcoin. You can take out other Bitcoin that's kind of untraceable. Edward Snowden talks a little bit about it. And if anybody is an expert on Bitcoin that's watching this and really understands Bitcoin privacy and would like to come on the show and teach us how to hide our Bitcoin transactions and how to actually keep our transactions private, it would be awesome. So Robert Manotti over here on X tweeted out, he said, Edward Snowden, Bitcoin is really bad on privacy. The only people who do it worse are Ethereum.
Here is everybody knows who is technically involved in this, that Bitcoin is really bad on privacy. I think the only people who do it worse actually are Ethereum. And that's because they use the account-based model as opposed to the address-based model. But a lot of people only use like one account. So they see it's like as if you were using Bitcoin, you were just reusing the same wallet. You get this giant history cruft that just follows you wherever, and then you create all these chain explorers, and then people see every smart contract you've interacted with on Ethereum, and it's problematic. Bitcoin suffers from the same thing, but at least largely because there's not as much contract-based activity on Bitcoin. They only see, address A sends to address B and so on. They follow it out. They chart it. They see where it splits on the chain, and then they try to go where it goes back to a common node, or they track spends, or they go where it goes through KYC gateways. And, they find out it with the tools that I had at the NSA in like 2013, tracking Bitcoin transactions would have been very, very easy. And this is why, even though I used Bitcoin to rent the servers that I used for communicating with journalists and passing, massive archive files over the internet anonymously, I was using Tor. I was using sort of mixing services. I was trying to basically do anything that would buy time. It wasn't that I thought the NSA wouldn't be able to follow the trail. It was that, I'd have to go to this guy, and then I'd get routed over to the office, and then they wait on it because they had other things to do. And it wasn't until there would be a sustained effort that they would be able to do this. And by then, I would have already contacted the journalists, so the door would be closed. normal Bitcoin users don't have that level of awareness. They don't understand the network flows. They don't understand simply your IP address sending, this transaction to this node that then passes it on. All of that leaves a history that is largely being recorded. There are ways on Bitcoin that they can improve this, and that are done like coin join transactions and the whole join market thing, which are great, but they're way too technical for average people. We see some wallet providers who are trying to build in their own mixers, and that's great. It's an improvement, but it's really not enough. You have to have this stuff in the protocol. It has to happen on chain, and that's where you see things like, Monero is great. I use Monero, right? People think I'm like a super Monero hater, and no, they've got a couple super toxic people in their community, and there were some bad design decisions like a million years ago, and it's not perfect, right? But what is? Zcash has its own flaws too. And then Zcash, it's also great, but for a lot of people, they're not using the shielded transactions, or at least they weren't using the shielded transactions. Now it's getting easier. They've got mobile clients that will you'll do a transparent transaction and then it'll roll you over to a shielded transaction automatically. And these things are great. This is what we need, though. We need people to be able to transact on chain at any time and effortlessly without their awareness, the same way that when you connect to Gmail through a web browser, it's using HTTPS. You should have levels of privacy protection baked into the protocol. And this prevents the kind of tomfoolery that we see the U.S. government beginning to engage in with things like OFAC and Tornado Cash. And my reflex here is that everybody gets excited about sort of speed and scalability. And what is so remarkable about how Bitcoin succeeded in the way, the reason that it changed the world is because that wasn't really the focus. It was a factor, it was an interest, but they went, let's make this work. Let's make it powerful. Let's make it unstoppable. And then we can worry about sort of the scaling and speed and everything else later. Now, Satoshi wasn't trying to attract VC capital, right? He wasn't worried about, or she wasn't worried about competition. But when we look at it today, we have these networks and we see things like, again, the privacy coins are a great example of this. They are really strictly better than non-private competitors in a lot of ways. But the network effect determines so much in terms of use, in terms of adoption, in terms of acceptance, that it's really difficult for them to get traction. One of the things that is so interesting to me about Ethereum is the fact that it has so much interaction. It has so many cross-chain activity through bridges and whatever. Bitcoin, we really don't have very much with that, except as the kludges to sort of enable everything else, because it wasn't really supported at the protocol layer. We see more interest in it, but I think the idea that we need to accept, and unfortunately, Ethereum is really calling this into jeopardy with this whole OFAC thing, because it shows the flaw of going, well, let's focus on speed, scalability, efficiency, and let's put sort of decentralization to the wayside. We need movement between chains, right? There's like the Bitcoin maximalist mindset where it's like one coin to rule them all. And we're going to end up there if the other chains, frankly, don't get their shit together, like with Ethereum. But that's not the world we want. We want people to be able to choose the properties that are most efficient and interesting and valuable to them. Maybe you store your savings in a coin that's a strictly good store of value, right? And I'm talking about like Tether or stable coins. I think the centralized stable coins are crap. I'm very interested in like the MakerDAO DAI thing, not the Maker token, but the DAI part of it. It's phenomenal. The fact that it still works is remarkable. The fact that it still holds its peg is remarkable, just through some over-collateralized algorithm schemes. But then when you want to sort of make it more private, you move it through, whether it's a Tornado Cash like thing that's on chain, great if that's supported there. But imagine it's able to freely move to another chain. We see something now like the Ren bridge that allows you to move from Ethereum into like RenZec, and then you've got your Zcash there. And then maybe later on you move back into Bitcoin because you want to spend there or speculate or whatever. You just trust this one more to hold its value. Or there's some feature of the chain there that's interesting to you. And then you move it somewhere else. There should be a portability here that's not costing you like 2% on every transaction where, you know, we have all these DeFi people that are just trying to extract rents from the ecosystem. But we want people to be able to answer that trilemma for themselves. Right now, very few people are qualified to do that because they don't understand the implications of moving between these chains. They don't understand the values and the properties between it. They just see a stupid dog avatar on a coin that comes out of Elon Musk's account, and then they're like, yeah, write me down for that one. And that's a problem. But as the space matures, as these sort of networks become more sophisticated, people should be trusted to make their own decisions on these kind of things. And we should enable that. There should be coins that are better in certain parts of this trilemma than others. And that's okay, right? Maybe we have a transactional layer where it's super fast and it's got great scale, but it's got terrible properties for everything else. It's super centralized. But it doesn't really matter because you never keep anything on that chain. You only basically rinse through it to spend. It could happen transparently. Nobody's even aware it's there. But the infrastructure has to exist. People have to build it. Like there has to be space. And that's where we still see the great immaturity of the space. Everything is an experiment. And the people who are doing really well with precisely this kind of thing, like the Ethereum guys, I really like, again, that they've done this proof of stake thing, but it's incomplete. We don't have the end. Now we're being confronted with the problems of it, and they really need an answer for this. And right now, there's been no response to the OFAC compliance disease that's, you know, eating into their blocks, and we needed a solution to that.
Oh, Edward Snowden bringing some heat, man. I like it. What do you guys think? David Cortez, am I saying that right? Cortez? David Cortez, 133 over in the chat says Sparrow Wallet has CoinJoin function. Check out BTC Sessions YouTube channel. He does an awesome tutorial on how to use it. I did. I actually just watched that this week, and I actually just downloaded Sparrow Wallet. I got the MK4 because of his videos. And I used the air gap signing, which if you guys never seen it, you have a device that never connects to the internet. So your device never touches the internet, and it has a memory card. So you use like a desktop wallet like Sparrow, and you initiate the transaction on Sparrow, and then it starts the transaction, but it can't finish it because it doesn't have your keys, so it can't sign it. So you export it on a memory card. You take the memory card out, you put the memory card into your device, which it looks like a little mini calculator, and then you sign the transaction, and then you pull the memory card out, and you bring it back over to your desktop, and then you load that back into Sparrow, and you broadcast the transaction. It's really, really unique on how they do it. And then I also just ordered the Q, which is their newest wallet, which is like a BlackBerry. And that one I think is going to be a little bit better than the MK4. So I would get that one if you could. You can pre-order them right now. And if you use BTC Sessions at checkout, you'll get a little bit of a discount over there too. So hopefully Ben will be able to come on the show. I would love to get him on. Brian D. Mint, you guys seen that interview was it 2 weeks ago with Brian? Brian put me into contact with Ben. He was down there at the Bitcoin halving party in El Salvador. So I'm not sure when he's going to get back. If he's back already, he might be back by now. But hopefully he can come on the show. So that'd be awesome if he could. I'd really like to get him on the show. I like Snowden too. I like his outlook on things. And I don't know how I feel about other altcoins. I'm always hit or miss, man. Sometimes I'm all about them, and then other times I'm just like, right now, I think Bitcoin's the most important thing. And I think without Bitcoin, every other altcoin will fail. And eventually, and I do like Monero, and I like the privacy aspect, so I think Monero is one of those coins that's needed. But if you're able to hide your Bitcoin, which would be awesome if one of these companies like CoinJoin, I don't fully understand how that works. So maybe I can if anybody's in contact with anybody from the Sparrow team, I would love to interview people from these that are creating these wallets and their devs so they can come on the show and actually explain to us how the security and privacy works. I think that'd be really cool. I think a lot of people would like it. Hey, oh, no way. David said he's awesome, man. Love his tutorials. He's even doing them in Spanish now. I was watching one of his videos yesterday and I'm like, what in the fuck? Like, how do I turn this Spanish shit off? And I'm like, what am I? Do I have a VPN on or something? I couldn't tell. That's so funny. He actually does them in Spanish. I was wondering that. I was really wondering that. Let's jump over here and take a look at this next tweet. Lucky Chart Ape says a very important video explaining why order flow is bullish here on Bitcoin and what that actually means. I'm always interested in people that are actually making these, charting videos and are over here on the charts. Sometimes I just think they're drawing lines, but other times I'm like, holy shit, man, I should have listened to that guy. So let's see what they have to say.
Good day, everyone. I thought I'd take a few minutes to talk about the order flow here and why it is bullish. And look at some previous lows that we've put in and talk a little bit about this phenomenon of people, no matter how many times it happens, aggressively selling into the lows. And aggressive is trading at market, and aggressively buying into the highs. And how you can start to see there's two types of traders. The type of trader who is reacting to the market shorting, market selling at the lows, market buying, market longing at the highs, getting wrecked on both sides. There's another type of trader, that trader who sits patiently and is absorbing all of this selling pressure. So one of the things that can get confusing about the term bullish order flow is we've been developing bullish order flow across this range at this low, these lows, these lows, these lows. And so you'll see these kind of moves down that look quite bearish, and that you'll see heavy selling coming in. And so people will say, well, if order flow is bullish here between this low, where we wicked and liquidated everyone, in this low, then why is price going lower? Well, it's actually the fact that there's aggressive selling here that's making it bullish. It's not bullish in the sense that price is about to go straight up. It's bullish in the sense that all of the retail traders are bearish, and they're aggressively selling into this range, expecting lower. That's why you sell. And that's going to cause price to move into some lows and form a bit of a base here if there's support coming in. The reason it's bullish is because we know big traders are stepping in here and holding up price. We know that because CVD, cumulative volume delta, is making new lows while price is kind of going sideways here. Now, it does not mean that price cannot go lower, but it is an early sign that some traders are stepping in here. Let's go look over here because it's very similar to this. When we are ranging here at around 64K, 64 to 66K, we had some pretty big bullish divergences forming before this big move up. Now, we ended up ranging here for a few days, and basically all I could keep pointing out to everyone is just, this is bullish order flow. This is bullish order flow. CVD, heavy aggressive selling, people are bearish, getting absorbed here. But then, but the bullish absorption is in the context of this range. And it leads to a higher probability that price is going to push up. People are bearish, aggressive selling coming in. But what can confuse people is, well, then why is price going lower? If it's so bullish, shouldn't it go up? Well, no. It's ranging into aggressive selling. Now, the big traders don't panic that they want price to go up immediately. They actually want price to range. They want to build and fill positions, right? They might even participate in holding price down a little bit at the highs and driving it back into liquidity, getting people really bearish selling into it. So there's a phenomenon here, right? Price was up at the highs. Where do you think the aggressive buying comes in? Let's go into this order flow here. Well, the most aggressive buying comes in right at the highs. $22 million of aggressive longs into this candle right at the high. Did you see 22 million longs come in anywhere else? No, just right at the highs here.
So funny.
People like to sell or buy aggressively to the highs, get wrecked, right? This is always the case. The big high delta positive candles are typically coming in after price has made a big move up or is ranging at the highs. You'll often find that when price is ranging at the highs. You'll see some of these big positive delta candles here, right? That's aggressive longs. Where are they coming in? 73K. Where do you think the aggressive selling starts coming in? After the big move down, price is ranging at the lows, then you start to see the phenomenon of all the aggressive selling orders coming in.
That's too funny.
Right? We just looked at that.
I've never seen anybody chart like this.
I like to use these bullish divergences in order flow for some confluence. And what does that look like with the line chart on CBD? Well, you're looking, I just have it overlaid here, but you're looking for CBD on some relevant time frame to be making new lows while price is either trading sideways or making higher lows. And sometimes these divergences can get quite big. And it's simply a sign that people are getting really bearish as price is ranging. So selling aggressively into support. And the sign that there's a bullish divergence is that price isn't making new lows as CBD is. And all that means is big traders are stepping in to take the other side of all that aggressive selling pressure, and they're holding price up. Why do you think somebody would absorb? This happened dramatically here too, right? CBD making a really dramatic new low as price is just ranging, actually making higher lows, and we have another big move up. And again, where do you think all the selling comes in? Across this range. Where do you think all the buying comes in? Up at the highs. And this is aggressive buying. So it's basically a battle between market buyers and limit sellers, and market sellers and limit buyers. And big traders like to trade with limit orders. Big traders usually win. So it's just kind of interesting. Of course, nobody wants to buy down here. Everybody wants to sell. And we have those signs of absorption coming in. Some higher time frame technical ideas. So I consider this bullish. It does not mean that price can't go lower. It just means the aggressive traders are bearish. They're selling into these lows. And as of now, that selling pressure is getting absorbed.
I couldn't agree more, man. It's interesting. Rumble Rick over in the live chat says Kite's calling for possible 50K pullback. I think it's very possible. I think my lowest limit order right now is at 59,500. So we'll see if they get hit. But I ain't selling. My friends. Check this out. Rookie says 80% of altcoins are back at the beginning when Bitcoin was priced at 35K to 40K. And you're still shitting pants and not buying. Never gonna make it. Never going to make it, folks. Never going to make it. Let's swing over to bitcoinnews.com where we pick up our next article. 30 trillion in U.S. debt spiral could spill over into Bitcoin. The U.S. debt is higher than ever. Could a default scenario be beneficial for Bitcoin? Because the U.S. dollar is the world's reserve currency, it's critical to comprehend the consequences of the U.S. debt crisis for the global financial system survival. Furthermore, while everyone is concerned about the high inflation rate since 1981, 8.6% in May, the bigger picture is how inflation will help the U.S. government as well as solve all their problems. Will the U.S. default on its debt? So the U.S. debt default and debt ceiling. To comprehend why the U.S. government can default on its debt, we must first examine and define two terms. Number one is debt default. The term refers to a borrower's inability to repay its debt. It can be individual default. It can be an individual default when one person is unable to repay a debt, or a sovereign default when the entire country is unable to repay its debt. Let's talk about the debt ceiling, which is number two. The debt ceiling refers to the amount of money that the U.S. Congress permits the U.S. government to borrow from the Federal Reserve's board, aka the U.S. Central Bank. Simply put, the debt ceiling is a piece of paper that specifies the amount of money that the U.S. can use to pay down its debt. As a result, the debt ceiling must be raised from time to time to accommodate the growing debt. Now, the raising of the debt ceiling is often referred to as a crisis for the U.S. government. However, it's a political show because the debt ceiling is always lifted, regardless of which administration is in power, which is true. Let me just grab a drink of water here for a second. They actually suspended the debt ceiling because it was like having to happen like every couple months, and it was just a shit show for Congress. So like, we're just going to suspend it till Biden's out of office. McCarthy is going to give this man unlimited amount of money. Like, let's not rein in government spending. Let's not balance a budget. Let's print fucking money. The U.S. debt since the U.S. abandoned the gold standard in 1970s, the country's debt has skyrocketed. Imagine that. Main culprits as to why it has increased parabolically are money printing by the Federal Reserve, QE as they call it, to help the economy recover from various crises, the GFC, repo crisis, COVID-19, etc. All the crises that our Federal Reserve is supposed to prevent us from, yeah, they're happening anyways. And the Federal Reserve lost $114 billion this year. So on top of driving us into the worst economic crisis in the history of the world, the Federal Reserve has also managed to lose $114 billion, or you tax peasants are going to have to pay for that in one way or another. So due to a scarcity of foreign investors, Russia, China, etc., the Fed is monetizing the U.S. government debt. What could go wrong? Excessive expenditure. So by the U.S. government spending money that one does not have, e.g. government bills, military, Social Security, etc., the U.S. debt to GDP ratio, which is simply a comparison of revenue and expenses, is a more worrying statistic. The U.S. debt to GDP ratio is at 125% at the time of writing. Once a country's debt to GDP ratio exceeds 130%, it approaches a point of no return. A government may struggle to cope with the expenses of the debt, as the key threshold line between sustainability and unsustainable is razor thin. So to put that into perspective, that means our government is taxing you peasants because we produce nothing of wealth here. We don't produce oil, gold, lithium, anything that the world wants. We produce social media trolls and liberals and blue-haired freaks by the boatload, folks. And now we're importing 50 million migrants and we're putting them on government assistance. What could go wrong? What could go wrong? I don't see why that's not going to be profitable for the United States government, but check this out. Debt spiral scenario. The U.S. government has three options as a result of the aforementioned circumstances. Hard default. The U.S. will not pay its debt in full. Atrocity measures. The U.S. would have to begin living within its means, which we know is never going to happen. How about a soft default? The U.S. would default on its debts, but in the long run. Soft default. Hard default. This would be devastating for investors, as U.S. treasuries are recognized for being a low-risk consent cash flow investment. However, countries have defaulted on their obligations in the past. Spain has defaulted numerous times despite importing large amounts of gold at a time. Russia defaulted in 1999 due to a deterioration productivity and the chronic budget imbalance. Argentina defaulted in early 2000s due to a rising inflation, and Greece defaulted in mid-2010 as a result of failing policies implemented in the aftermath of GFC. Because the U.S. economy is highly leveraged and financialized, a server default would be disastrous for the global financial markets. A global currency hard default would almost likely result in a stock market crash, reduced consumer price spending, lower tax revenues, and eventually economic catastrophe, starvation, and war, which I think is where we're headed. Because the global financial system is too big to fail, the U.S. must roll over its debt, ruling out a hard default. Now, how about other measures? The government actions that reduce the national debt by reducing expenditures or raising taxes are known as atrocity measures. Government spending in the U.S. accounts for more than 30% of GDP, which, if reduced, would have a significant impact on people. Changes in the government spending include limiting the unemployment benefits, raising the retirement and healthcare eligibility age. So, of course, you peasants keep working, even though we promised you a life of freedom after you worked 60 years and you worked your entire life away and you're too old and rickety and your body's broken and you can't afford to spend anything because you can't afford to buy anything because the money that they give you is never going to be enough to offset their inflation rate. But yeah, let's raise that. Okay. Lowering government employees' salary and benefits. That's never going to happen. Decreasing social welfare programs for poor people. That's never going to happen. Not when we're importing migrants and putting them on government assistance. And how about tax reforms? Any of those sound optionable to you? Nah. Trucity measures have the greatest impact on low-income individuals, as spending cuts have a negative impact on social safety nets. These policies would result in bloodshed, social unrest, riots, and other negative consequences. Unless it is a dictatorial state, the political regime would have to call off the bluff or risk being overthrown by its own people. The U.S. must continue to prop up its spending in order to maintain numerous government services for its citizens. As a result, the second alternative is extremely unlikely to become a reality. Of course, it's not. How about a soft default? A more plausible possibility, known as a soft default, is for the U.S. to depreciate its own currency in order to repay its debt, aka debasing its currency. Money printers, quantitative easing, are one way to achieve this, as they introduce inflation or loss of purchasing power, which means that goods and services cost more while your income is worth less. Inflation is a form of a hidden taxation, which is almost impossible to measure, John J. Berkeley. Now, the U.S. dollar declining purchasing value over the last century suggests that the U.S. has been soft defaulting since 1913. Thus, you must hold scarce hard assets, trophy assets, in order to protect your wealth and weather the soft default. Also, in recent news indicates the U.S. has no wish to lose its global role as a global power by default. Destroying the dollar will never happen. And the Fed Chair Powell looks for rapid changes are taking place in the global monetary system that may affect international role of the dollar. FedNow services will be coming online in 2023. A U.S. central bank digital currency would improve upon this. That was Jerome Powell in 2022, and now he's kind of backpedaling on that because I don't think Congress is ever going to let him. So, but I wouldn't put it past our Congress. Now, maintaining the dollar as the world's reserve currency while also building the digital dollar, the CBDC, as I have discussed, will give the U.S. even more control and influence over international affairs. Conclusion, the U.S. will never default on its debt because doing so would result in instability, anarchy, rioting, and eventually war. However, because of how indebted and financialized the U.S. economy is, the U.S. government is unable to curb spending or raise interest rates, taxes, or other atrocity measures. Instead, the U.S. will declare a mid-default. The Fed will continue to buy U.S. treasuries, U.S. government debt, with its magic printing machine, while gradually depreciating the dollar. According to Jerome Powell, the current chairman of the Federal Reserve, and verified by Neil Kashi on 60 Minutes, the soft default is immune to criticism and also happens to be a simpler solution. So the Cantillon effect in the 18th century meant that the closer you were to the king and the affluent, the more you benefited, and the further you were from them, the more you suffered. Thus, due to the Cantillon effect, the wealthy will get even wealthier. Today, the Fed's quantitative easing benefits hedge funds and private equity firms while hurting others in the process. So that's the harsh red pill reality about the current monetary and financial system. Promotes Bitcoin as a monetary resolution that will improve the world. The orange pill reality, Bitcoin system, will allow for the creation of a more equitable and simply better world for all. While the US dollar and other fiat currencies have to inflate supply, Bitcoin has a finite supply. The total number of Bitcoin in circulation will never exceed 21 million. The monetary policy of Bitcoin is automated in the source code, making it a predictable and independent of arbitrary human decisions. And that's why you should all be buying Bitcoin, folks. That's it. That's it. Yep. Rick says, I think 49K is possible. He said as well, I will see if a wick hits the 20 range. You think Bitcoin's going down to 20K? Oh man, that would be interesting. That would be really something, considering how few Bitcoin are on exchange and how many countries are buying. You have the Hong Kong ETFs that just launched. So I think that's going to be an interesting part of this. We now have, everybody's bullish on Bitcoin. Check this one out. So Grayscale CEO, Michael Shoshine, if I'm saying that right. Sonersign, if I'm saying that. And FraudStart's head of research, Tom Lee, discuss the connection between Bitcoin markets and the federal AI.
What are going to be some of the things you'd advise to look at around Bitcoin over the next couple of weeks, months? And maybe you'll start with the halving and other catalysts that you think are worth paying attention to.
If I was to simplify it, I think there's three drivers. On the demand side, are more people going to be acquiring Bitcoin and holding it in a high quality way? And the second is the supply. If you're reducing supply, and the halving is going to reduce the supply. And the third is, of course, monetary policy, and the Fed is going to ease. But I think you have to remember, the more AI takes off, the more the world is going to need a way to control AI. There's a great book by Stuart Russell called Human Compatible, and he even suggests that using a blockchain to really try to control AI is going to be very important. So Bitcoin's going to play, I think, a very big role in the future of trying to establish digital trust.
I think so too. I couldn't agree more, my friend. Everywhere you look, it's just bullish, bullish, bullish for Bitcoin. Bitcoin Magazine, new U.S. Senator Marsha Blackburn, CBDCs are a spy tool for the government control.
And one of the things that we look at is the freedom aspect, the privacy aspect of Bitcoin. That's a very good thing. And, as people are more distrustful of governments and they want control over their assets, so this is something that they have that unilateral control. That's a good thing. Yes, the CBDCs, I have led against that, especially when it comes to the digital yuan. During the Olympics in Beijing, the Chinese Communist Party wanted everybody to load the digital yuan on their phone, so much so that they were willing to give it away free. And they did that because it's a spy tool for them. And when you have a digital currency, a central bank digital currency, then you begin that social credit score. And you have a central bank that can allow or disallow you to spend money on certain things. And I think that as a freedom-loving people, that is somewhere we do not want to go.
Oh, shit. Yeah, thanks, guys. Appreciate you. I was on mute. Good catch. Good catch. So what I was saying was Bitcoin Magazine. I don't know if you guys have seen, but they put out an article yesterday talking about like Bitcoin and Ethereum being like this super team. And it was like weird as hell watching these Bitcoin only companies go to, they're talking about altcoins. It's so fucking weird. So Matt R. Cratter over here on X, goes by Matt Cratter, tweeted out, he says, hashtag Bitcoin, more Bitcoin Magazine, stinky cheese.
This is Matthew Cratter from Bitcoin University. Today I want to talk about a bit more stinky cheese that has been emanating from Bitcoin Magazine. About a month ago, we talked about Predator's post here in which he drew attention to a sponsored article, in other words, a paid article that had been published in Bitcoin Magazine in which they were promoting the Karma token airdrop. Francis of Bull Bitcoin had a good comment here. Compromising with shitcoinery is a slippery slope. You start with pseudo-intellectual arguments about what constitutes spam, and months later you're pumping token airdrops. Fortunately, this has since been removed from the website. And at the time, I remember seeing Max Kaiser posting how if even one shitcoin got through in El Salvador, the reputational damage and loss of confidence which would damage President Bukele's economic freedom agenda irreparably. My response was, do you apply the same standard to Bitcoin Magazine when they run a sponsored post for a shitcoin? Max responded that some stinky cheeses rise to the level of greatness. You might think Bitcoin Magazine stinks, and maybe it does, but in this particular and unique instance, stink tastes fine. And then in a follow-up tweet, I can't believe I shut down the latest Bitcoin Magazine FUD with my stinky cheese analogy. Damn, I'm good. And Max is good. Unfortunately, Max, there's some more stinky cheese here, and it's not the good French kind. So please help us. As I posted yesterday, you may think of Ethereum as unethical pre-mined garbage, which is trending to zero against BTC, but that won't stop Shipcoin Mag from running pro-ETH editorials written by an EOS, which is another crypto shipcoiner. This is the article in question, which was published yesterday by Yves LaRose, Beyond Tribalism, the Synergistic Future of Bitcoin and Ethereum, an argument for why Bitcoin and Ethereum can actually complement each other in the long term rather than exist as competitors. Now, this would be a fine article if it was published on your regular crypto site, but I expect something better from Bitcoin Magazine. This is Yves LaRose. It turns out he's the co-founder and CEO of EOS Nation, executive director of the EOS Network Foundation, and has been involved with EOS for many years now. Now, EOS, if you're not familiar, ran the oldest scam in the crypto industry playbook, which was basically, you give me your money and I'll give you something really special in return. It's actually dog crap, but let's pretend it's chocolate instead. In this case, you gave them Bitcoin or fiat, and they gave you EOS. This was the playbook that the issuers of EOS took, and we see here a blockchain startup just raised $4 billion without a live product. This is from May of 2018. Money was basically raised by this private company called Block.one, and then they issued everyone EOS tokens. This was founded and all done in the Caymans to try to escape the SEC, but they did end up getting sued by the SEC, settling charges for $24 million, which in this case is really just a slap on the wrist. So again, this was the deal. You get EOS crypto garbage. In exchange, we get fiat on Bitcoin, and then we buy more Bitcoin with the fiat that we got. And if we take a look, Block.one as a private company is now one of the largest holders of Bitcoin in the world. They basically gave crappy EOS tokens to everyone, and they used the proceeds to buy Bitcoin. They currently have 164,000 Bitcoin, which is worth approximately $10.3 billion at current prices. If you want to see what the people who exchanged their Bitcoin or fiat for EOS got, they got a declining, worthless token. And if we scroll out, you can see quite how bad it is. So anyone who's involved in EOS, this gives you an idea of the damage that they've wrought. If you're enjoying this video so far, I just ask you to help to support the channel. Clicking that subscribe button really helps. Click the thumbs up or like button.
It's a hard slope, man. It really is. But when you realize that Bitcoin's going to millions of dollars this bull run, like even like the best like altcoins, you just wanted something where you could 10x your money. Like, yeah, you get 100x's coming in every while. Those are really rare, and it's even harder to know what they're going to be and to put a lot of money into them. But just being able to put your money into something that's going to 10x, I think was huge last bull run. And I'm looking at Bitcoin like it's going to 1 million this cycle. Like there's just no possible way with the amount of Bitcoin people are buying and the rate they're taking it off exchanges that we're not going absolutely parabolic. And you just think about like how much money the US ETFs have brought in. And then you look at how much money you think is going to come into the Hong Kong Bitcoin ETFs and everything that's going on in every other country that's getting ready to launch their own ETF. I mean, it's a lot of money. And you look at people like Gary Cardone, that's a billionaire, Grant Cardone, that's a billionaire. And these billionaires are putting 90% of their wealth into Bitcoin, and they can't buy enough of it, even at 70, 60, doesn't matter where it's at. They're going to keep buying. I'm going to keep buying. I think everybody I know that's into Bitcoin is just constantly trying to accumulate. I got at least 5 people in the last 30 days that are now taking a percentage of their paycheck and they're using Strike and they're converting part of the money. And we had another NFL player. Think about that. There's 3,000 something NFL players. How many of them are taking their salaries in Bitcoin right now? And that's millions and millions of dollars. Think about that. Like if they got they get paid $10 million a year. I mean, they're getting it all in Bitcoin versus what they spend. If they're saving in Bitcoin, they're probably really good with their money. They're probably smart. And I just think about like that. Every NFL player, every hockey player, every NBA player, every baseball player, eventually every UFC fighter, all these people are going to be taking their payments into Bitcoin. And it's just, like I said, there's only 200,000 people in the world that own one Bitcoin today. Maybe that gets up to 300,000, maybe, or maybe not. Maybe, I don't know. Maybe there's only going to be 500,000 of us in the world that ever own one whole Bitcoin. I want to be one of them. I sure as hell want to be one of them. I am one of them. So it's like, I'm going to keep stacking. If they keep staying at these levels, I'll probably get to 5. I'm like this close to getting to 4. I could get to 4 right now if I turn off my bots, but they make me so much money. I don't want to turn those things off. They're just too profitable. So Yeah, man, I think you guys should just keep stacking. I think it's the only option you got. What else are you going to do? Go to fiat? I don't think so. I don't think anybody's going to fiat, but we're going to wrap it up here. We've been going on an hour and 10 minutes now, folks. Thanks for joining us on the Ryan Matta Show. If you guys could please smash that like button. If you guys want to support us over here, you can visit mypillow.com/Matta, and that'll get you 65% off. I think 50 to 65% off everything store-wide. So if you want to support your friends, families, use my promo code Matta. If you go over to Bybit, and you guys are not in the US, my affiliate code is 19834. Coinbase links are down in the description. If you guys want to support us, you guys here in the US, I think Coinbase is the easiest way to buy Bitcoin. Take it off exchange, put it in a cold storage wallet, secure your assets. God bless you guys. We'll see you guys over on LFA TV today at 2 p.m. Eastern Standard Time. We out. Peace. Oops, wrong one. Now we out. Peace.
Run.